Welcome back to Market on Close. I'm Nicole Petalides. We are live at the New York Stock Exchange. So glad you are with us. About 15 minutes away from the closing bell. Phil Streible's with us, Chief Market Strategist, Blue Line Futures, joining us for our Friday Commodities chat. And there's a lot to talk about. I mean, certainly we're off the earlier strength and the records that we saw for the S&P 500, but still the S&P is up over 1.5%. The Nasdaq's up 1.4% this week, and it's been a winning year so far. What do you make of the strength that we're seeing in equities?
Well, I think it's been fantastic. I mean, we were able to recover that big sell-off from that last Fed meeting in December where Jerome Powell said it was just a coin toss and they barely extended that rate cut to us. So we had that sell-off. We had that sell-off into the end of the year that was pretty aggressive the last 3 trading days, and now we've recouped all that. I mean, the market, a lot of people are identifying technically. We do have a double top on the charts here, so people are taking a little bit off the table. People are also cautious. We saw the volume off quite a bit because of the fact that they want to see what is President Trump, what are these tariffs and things that he's going to announce here. I think the most interesting thing next week is going to be when you have that FOMC meeting, Jerome Powell doesn't cut rates. The expectations are for inflation to rise a bit, the PCE number, the CPI number going farther out. And then you got the press conference after, and what is the first tweet that Trump is going to send out there? He's probably going to say, I think Jerome made a big mistake. He should have cut rates. Bring rates down now. It's going to be all over the headlines, and it's going to create a little bit of wild volatility in the markets.
Yeah, I mean, he was already calling for that. On the 22nd, he was saying, I want to see the rates lower. He was talking about OPEC, oil lower, that we have a lot of energy right here in the United States, and we're going to use it. Right? There was something that he said. He declared an energy emergency.
That's your perfect transition to oil. I mean, oil price is up about 4.5% year to date. It cut off half of their gains since he's taken office, but we fell 1.6% yesterday just on that immediate comment. What he's expecting is to have high production and low prices. That's totally achievable, but you can't have that and have complications when you start to implement a hard stance on Iran, maximum sanctions on Russia. That's your number 3 and number 7 largest oil producers. Every time he tweeted in his last time around that he was in office about oil prices fell $1 to $2 right away. So his big question is, how fast can we increase production, and at what price is Trump comfortable with as far as oil? And the reality is that oil was in the 50s the last go around, and he was still slamming it. It took till it went negative before he stopped tweeting about it.
Right, understood. Let's go into some specifics. I mean, copper always on your radar, right? What are some catalysts or things that you're watching when it comes to copper?
Yeah, it's one of our favorite commodities in the metals complex, and it often acts as a leading indicator for inflation in the economy. We've got global forecasts. The demand forecast for copper is expected to double over the next decade. So you take an EV vehicle, EV vehicles use 4 times more copper than traditional gas vehicles. All this AI infrastructure, the intense computing, you need to provide more copper for that. What people are going to notice is that the computers that are just 2-3 years old are really going to start to lag because of the fact they need bigger, faster, better chips. They're going to need more copper for the grid and renewable technologies. And then you have your traditional demand is going to pick up because of the fact Trump wants such a strong economy and infrastructure, construction, infrastructure spending, and defense. And China has shifted from identifying property sector weakness and correlating copper to that to now manufacturing and new technology.
Right, understood. Have you been hearing a lot about Bitcoin? Because, this is a new president who's made digital assets and Bitcoin front and center and wants to make sure we're a leader here when it comes to crypto. We've been holding the 100,000. We went past 110,000 this week. What gives and what are you watching?
Consolidated in the last few days right around this 105 mark. Seems like 102 is kind of the lower end. At 108 to 110 is the upper end. They needed to hear that word reserve out of Trump when he was talking about about it, a Bitcoin strategic reserve. And he just didn't, he put that into play. He appointed some people that really are pro Bitcoin, and they need to have some hurdles. They got to jump through some regulations to allow banks to have custody of this. But until we get that, that's where we get the $150,000, $200,000 Bitcoin. But he's got to start to turn. He's got to identify that we need this strategic reserve. And I think that he's just taking things one step at a time. So, you know, he's really picking on Canada and Mexico at the moment, identifying the European Union, giving China a bit of a breather here at the moment. I think he's going to be more tactical with China going forward. But yeah, Bitcoin, you want to see it close over about 107,000 on strong volume. And I think you get that breakout to new record highs.
Yeah, yeah. And what about gold? I wanted to ask you because we were seeing some of the highest levels since last October for gold. Why are people going to gold, and what levels are you watching?
It's really just that safe haven asset. You've seen a lot of foreign currencies decline significantly recently. So if you were looking at gold and we were sitting at a pub in Australia, we'd be seeing that gold's hitting new record highs against the Aussie dollar. We're seeing those record highs against the peso, the Canadian dollar, Swiss franc, Japanese yen, you name it, it's making new all-time highs. I think that the dollar index, now that it's starting to come off, that's what's lifting that as well. So it's been a currency play, it's been a central bank holding play, it's been a safety play, and I think it's one of the core assets that many people need to incorporate in their portfolio, along with equities and along with cryptocurrencies.
Right, understood. Phil Streible, great to see you, Chief Market Strategist, Blue Line Futures. Thanks, Phil, for being here.
Yeah, you have a great weekend, Nicole.
All right, thank you. And